Welcome back to the Mining Pod. You don't have Will and Colin, you have Charlie and Matt, and we're going to give you the best mining pod in weeks. We have a lot on the docket today. Well, enough on the docket for a whole mining roundup. We have CoreWeave gunning for a public listing. We also have CoreWeave refuting some Microsoft FUD. ASICs being released. Reuters were publishing what Blockspace reported on 4 months ago. And Cathedra selling a site. Let's get into it.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Welcome back to the Mining Pod. I'm Charlie.
And I'm Matt.
And we are the fill-ins for Colin and Will, who are both out on this beautiful spring week. If you are near a ski hill, you should go do that. That's what Will's doing. So in the meantime, you've got the B team. So thanks for tuning in to the Mining Pod. We do want to kick it off with the difficulty update brought to you by Luxor. Matt, I'm going to throw it to you to explain what happened on Bitcoin this past week.
Yes, we have been trudging through the most recent epoch, and we are, according to Hash Rate Index, 79% of the way through. And you may say, wow, that's a pretty big difficulty adjustment on the horizon, over 1%, 116 basis points to be exact, expected here in a couple days at the time of recording, but exactly March 9th. Yet, that's pretty stable given the last couple difficulty adjustments. It's been super volatile, Charlie. And you can actually see it there in the hash price chart as well, because fees have been pretty stable, but difficulty has been volatile as well as the Bitcoin market price in dollar terms. I mean, we dipped into the 40s as far as hash price goes.
Yeah, look at that, $45 per petahash per day, Pico bottom February 28th.
Yeah, that is absolutely brutal out there for miners. And if you're new to this, hash price, it is just kind of a measure of gross revenue in the mining space, as Charlie mentioned, dollar per petahash second per day. But we're getting back up to kind of what has been really a normal zone in kind of the mid 50s as price has recovered just a little bit. And the last difficulty adjustment was downward several percent. So that's what we're looking at right now. Not much on the horizon as far as Bitcoin transaction fees, unfortunately, to both Charlie and I. But yeah, a small difficulty increase is what you can expect at this point. And we're the vast majority of the way through the epoch. So it's all but certain to be a positive rise in difficulty. That's all I got. What do you got?
I mean, yeah, I'll just echo that. Like we saw the past few weeks ago, we saw what appeared to be like the peak in hash rate, peaking around over 800, well into the 800s exahash. Again, it's not a perfect measurement. This is an estimation of hash rate based upon the prevailing difficulty, but it appears that maybe due to price or maybe weather conditions or whatever, we've had a little bit of some rigs coming offline. We'll see. Yeah, and as you said, Matt, like transactions on Bitcoin, pretty sparse. We've seen the mempool clear several times in the past few weeks. For those of you listening, the mempools where transactions go to wait. Whenever the mempools clear, that means that there's we've fully gone through the queue of transactions on Bitcoin. So there's really not that much happening on Bitcoin, but there is a lot happening in the deal flow space of, like, I would say, relating to the extended universe of publicly traded Bitcoin miners. In particular, we have two news stories up at the top, both related to CoreWeave. Now, again, I and Matt don't pay as close attention to this, but this is notable because it impacts like the public miner space. We've got CoreWeave, who is gunning for a public listing. So if you aren't familiar with CoreWeave, they are the OG Ethereum miner who turned and pivoted into cloud computing giant. They filed an S1 to go public. They inked a deal with Core Scientific, one of the large publicly traded miners who clawed their way out of bankruptcy the past couple of years. And CoreWeave is now kind of like the shining jewel of AI plays for the American public, listings. And their contract, which is a 12-year contract, Core Scientific, is now worth $10.2 billion. So this like sets them up pretty sweet for a public listing, according to their S1. I mean, just looking, so we report on this at Blockspace in the past week, read our newsletter. Here's some data points from it. 1.92 billion in revenue in 2024 versus 228 million in 23 and 15 million in 22. And over half of CoreWeave's revenue, 1.2 billion in 2024, comes from Microsoft, so single client. And that actually does play into the next story. In addition to that, future expansion for CoreWeave is about half of it's going to be furnished by Core Scientific, who's kind of basically, they are the greenfield data center build out power pipeline for CoreWeave, because that's, as we talked about on this podcast, a lot like the constraint for future AI expansion. I'm going to toss it to you, Matt, for any color on this trend. We see AI, Bitcoin mining, always intertwined. What are your thoughts on this deal and CoreWeave's public listing?
Yeah, CoreWeave going public just puts another AI stock for people to speculate on, I guess is my initial take. But yeah, those that have been paying attention to the cross-section of Bitcoin mining and AI are well familiar at this point with the name CoreWeave and Core Scientific, although the names are kind of close, so we can kind of unpack exactly what they do, right? Core Scientific really just head, shoulders, feet jumped into the deep end as far as it goes from transitioning from Bitcoin mining to AI infrastructure. Now they have all of their power contracts and stuff under key and their infrastructure from the Bitcoin mining space, right? They have all of those megawatts and facilities available. And so that was really, I think, what CoreWeave was initially after when they signed this just mega $10 billion contract, which, I mean, just such a huge number, especially if you're just strictly following the Bitcoin mining space. I mean, we think that the CapEx spend is huge in Bitcoin mining, but then you hear some of the AI deals and it just blows your mind. But yeah, Core Scientific, right, was one of the first really to make this transition, and CoreWeave was sort of their longtime partner going into it. They already had some deals they had worked in the past. Like you said, CoreWeave already familiar and operating in the GPU space as an Ethereum miner many years ago. But now, as you put it, are kind of a darling in the AI space and have contracts with sort of the biggest, big tech cloud providers in the world, and Meta and Microsoft, and yeah, have a huge portion of their revenue coming from those giants. And it all is kind of intertwined and intermingled here. But I'll kick it over to you for the next story, because I think it's a really nice transition.
So yeah, part two of this story is relating to some FUD that went around last week, which was Microsoft perhaps canceling future contracts with CoreWeave. CoreWeave denies that any of these contracts have been canceled. Again, CoreWeave is preparing for an IPO. I think, Matt, you suggested that it's important to contextualize this by saying that Core Scientific used to be the largest miner by hash rate. And it's interesting because they're setting up to like cement their position as like the largest miner AI play going forward. So meat of the story is that the Financial Times reported earlier that, quote, unnamed people with knowledge of the matter said that some agreements had been withdrawn over delivery issues and missed deadlines, and that Microsoft had, quote, lost confidence in CoreWeave, but have several ongoing contracts, remained an important partner. CoreWeave, in a statement, said, quote, we pride ourselves in our client partnerships, and there have been no contract cancellations or walking away from commitments. Any claim to the contrary is false and misleading. Now, also in the article, it expands that even though Microsoft was 60, I believe, 1 or 2% of CoreWeave's revenue last year, it actually goes further to say that around 77% of CoreWeave's revenue comes from its two largest customers, obviously the largest of which is Microsoft. So this is not really following the Pareto principle of revenue coming from sources. These are major business deals between one of the largest cloud compute providers, Microsoft, and the darling AI play of US AI markets.
Yeah, this to me feels like a story of CoreWeave trying to kind of walk on the eggshells a little bit and make sure they don't kind of upset the market ahead of their public listing here. They don't want anyone to get the wrong idea. We don't necessarily know exactly what the contracts are between Microsoft and CoreWeave, right? Because they're still private. So we don't necessarily know, they were set to have this much revenue from Microsoft until this date, this, that, and the other. However, I mean, what we could potentially think about this, like one way to interpret this, right, is that all of CoreWeave's existing contracts with Microsoft maybe are still in play, and that they were maybe negotiating to have even more down the line as Microsoft is just kind of having a real strategic shift in priority in AI, like a lot of the big tech companies at this point. And maybe they dropped some of those, right? And CoreWeave, because they simply weren't set in stone, could interpret that and signal that nothing was actually canceled because nothing was signed. Anyway, to me, this just seems like corporate PR back and forth. It's not that exciting of a story, but it's worth mentioning because, like you said, Core Scientific is a major topic in the Bitcoin mining sector, as has been for years now, as it was the largest Bitcoin miner by hash rate in the previous cycle, went into bankruptcy proceedings, came out on the other end, was the first to pivot to AI. And all of this kind of comes together with CoreWeave and in this story. But those are kind of my general takes. We can kind of write off this story for the future, but just kind of still pay attention to the general timeline and negotiations between these companies.
Yeah, I think we kind of beat this horse dead sometimes, which is like, one of the advantages of Bitcoin mining is that you do not really need to have a BD component because you've always got a client. In AI, you have business deal execution risk. So, there's strengths and weaknesses. And in this case, miners have 100% of their revenue come from a single client, the Bitcoin network, but that client is not going to cancel any contracts. So that is I think we're going to keep talking about this. This will be a common refrain over the next several years.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, a country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
The next story we have, let's go to Reuters. who reported yesterday, March 5th, that U.S. authorities begin releasing some seized cryptocurrency miners. I gotta shout out and chill block space here. If you've been reading our newsletter, you learned about this 4 months ago. And thanks to Reuters, they do mention that we reported on this back in November. So if you weren't aware, we have had confirmation that the Customs and Border U.S. Customs and Border Protection and some of the FCC began seizing certain Bitcoin mining equipment late last year, according to Blockspace. And the reason being that some of the machines may have carried chips from the Chinese chip company SoftGo. SoftGo is related to, also makes like AI chips, which is a subject of scrutiny and caution, obviously, from the U.S. A lot of that equipment is reportedly becoming released. Again, undetermined amount of equipment, but this apparently, this seems to be kind of wrapping up this narrative cycle of seized ASICs because of what could be a misattribution to being a security risk because they contain a Chinese AI chip company's chips. Matt, thoughts on this topic?
Yeah, I always thought this was a bigger story that wasn't getting as much press as I anticipated with ASICs getting seized on the border. Given how much mining companies spend on ASICs and how much they emphasize their efficiency number, that is joules per terahash, for their fleets, I always thought this was going to be a bigger one. And now it's 5 months time from November to now where ASICs could have just been sitting there at the border, not plugged in, hashing. I mean, that impacts that trickles down and has an impact through the financials of these companies, through the forecasting of these companies of what they project down the line. It is, I think, a sigh of relief generally throughout the industry that the machines are getting released. It did have some potential interesting implications that, we like to kind of like pontificate on in the meantime of what if this actually was something that drew out more and there was kind of more space for a ASIC manufacturer in the States to pop up and compete more. Well, unfortunately, it seems like Bitmain will continue to reign king for as long as, we can foresee. I think those are my kind of general broad stroke takeaways on this one. Is that miners are going to be happy to receive their machines. Maybe it affects some of the financials and quarterly statements that you may have expected to be a little bit different with some of the publicly listed miners. And I guess last thing is that maybe hash rate goes back up to where it was before. Maybe we get some difficulty increases now that some of these machines are released. That's all I got. Over to you, Charlie.
Yeah, there's always going to be a reason that ASICs are being seized at some border somewhere. And this was just the past 4 or 5 months narrative. I do get excited, getting hopeful for domestic American, foundries and American ASICs made in America. But Bitmain is king for a reason. And so apparently the king gets to start shipping more of their rigs to the US, with fewer barriers. So, the last story I've got here is, our buddies over at Cathedra, shout out AJ, Drew, Tom, sold a 60 megawatt North Dakota mine valued at $21 million. Cathedra had 25% stake in this, so their cut of the sale is a little over $5 million, $5.25 million, which they plan to reinvest. They sold this site, again, 60 megawatts for $21 million, which comes out to about $350,000 per megawatt. That's a pretty decent upsale, especially if you look at Cathedra and Kungsleden, however you say that company. Cathedra and Kungsleden's merger, where kind of some of the focus was that Kungsleden could build out one of these sites for $150K roughly, per megawatt. So, to sell this just kind of a year or two later at what I assume is at least a 2x plus, pretty good deal, all the while you've been generating revenue from that. So I kind of like this story just because it's a little like look inside of not a super mega mine, but rather inside of like what I'd say like a substantial mine that's not a ultra mega super mine, but rather like this is a real business, and we can get a little window into the actual like return on investment, the deal structuring, and how that shakes out.
Yeah, I thought this was neat because it's kind of like the fruition of a strategy of Cathedra's pivot coming to life in a deal, just like a little bit of a nugget of that actually playing out. As you said, they had a merger with Kungsleden and really pivoted their strategy from, hey, we're not going to necessarily do prop mining anymore. And we're going to basically exit the ASIC hamster wheel of continuing to have high CapEx spend, try to up our hash rate, lower our or improve our efficiency of our fleet, and kind of play the race against all the other public listed miners, compete to try to get the best deals with the manufacturers. They decided this isn't the best way to have an ROI on our capital. We're out of this. And they pivoted, they did the merger, they decided we're going to focus on the infrastructure, on kind of like smaller megawatt size facilities. Maybe it's a little bit funny to say smaller given it's 60 megawatts.
60 small now, I guess.
60 small now, given like, you hear some sites are 1 gigawatt plus in capacity, but you know what I mean. They want to kind of refactor, improve the infrastructure side of things, hone in on the data center, pour capital into that, and try to just be a cash flow positive, high ROI business. And you know what? Like, if this story is any evidence, now this is a joint venture where they had 25% stake, but it's evidence of that strategy playing out. And so, I got to give props to the Cathedra team and really honing this down. And what I would expect is that, given some of the public discourse that the guys over there had as well, is their ultimate goal, I think, was kind of in the same trend of the micro strategies of the world. They kind of pioneered it, but Bitcoin per share. And so you'd imagine that they're going to take whatever proceeds they get from this and, either reinvest and try to do this again, or probably, buy more Bitcoin to enhance that Bitcoin per share number. So I thought it was an interesting story, and definitely look forward to keeping following along as far as what that company does.
Yeah, I got a soft spot for the smaller, scrappier operators, although publicly traded still, so they are publicly listed. But the small, scrappier operators who like pursue real cash flow and real returns, and you can see Cathedra, Kungsleden appears to be executing on this.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
That brings us to the next and last thing, which I do not have a specific story for, but it is our cry corner for the week, which is the volatility of public markets and getting into risk assets such as Bitcoin, thanks to the Trump tariff tug of war, I call it. It's been a particularly volatile week, Matt. Why has it been volatile, and how does this impact our world?
Oh my gosh. It's almost like why hasn't it been volatile is like another way to frame this question. I think we're just getting more news out of okay, wait, let me just say, this isn't necessarily like my personal opinion, right? But if the public opinion, it seems like everyone's trying to read tea leaves to try to piece together what is actually going to be happening in the months to come. And then different market participants are acting on that. And then, so we're having basically this seesaw in markets across the board, not just Bitcoin, in equities, gold. We had like a complete parity sell-off the other day with the tariff news. But yeah, there's a couple of things at play, right? People are reacting to Scott Bessent, the Treasury Secretary, comments as far as what his plans are for the rest of the year and really in the time to come as far as his role in the Trump administration. We have the tariffs actually coming out and being official. Canada, Mexico, China, right? All receiving these tariffs, but then a little bit of a walking back as Trump decides that actually we're going to give an exemption for 1 month to the automakers, and because someone I must have informed him that there was going to be an effect on the American consumer there.
Yeah, like 1 hour ago, right before we hit record for this is a Thursday afternoon, like Trump, I see, just announced that most goods from Mexico will be exempt from the tariff. So we have another seesaw.
Right. Yeah, exactly. And at the same time, we have, surveys coming out, consumer confidence is down. You have the futures market pricing in, 3 rate cuts this year when previously there was going to be no rate cuts this year. We're kind of all over the place. I think everyone's kind of trying to piece together the puzzles, and different market participants are buying one way, selling another. But Bitcoin is definitely caught in the whims of that. I mean, I think the recession odds from either is it JP Morgan or Goldman or one of the bulge bracket banks came out, and it was, we went from 17% to in the 30s. And so now there's recessionary fears as well. And I'll just add my personal tidbit here, take that with a grain of salt, because I think Bloomberg came out and said we would 100% have a recession like 2 years ago. And then we didn't really get one. So, I guess what I would say out there to the Bitcoin crowd, to the hodlers, the people that aren't necessarily into macro, if you're a long-term allocator, if you believe in the Bitcoin vision, I would just keep on your strategy and just not worry about the rest of this. I mean, to me, it feels like we are in the early innings of just mainstream consideration of this asset. It feels like it's like maybe, from an individual's perspective, like the companies, the professional investors that are running different discretionary portfolios or financial advisors, or the people running corporate balance sheets or sovereign wealth funds, right? It's almost like all of these kind of actors are in the 2011, 2012 phase. Like the awareness is there, and you have kind of like the early adopters, and everyone's just starting to really consider what Bitcoin is, what it could become, and what its appreciable story is, what its fundamental investment case is. So I don't know. As it feels like we always end on Charlie when we talk, it's never been a more interesting time to be in Bitcoin. It's never so been more
interesting. I mean, you talk about this because, like, you mentioned Scott Bessent, right? And this is the first time you've ever had like one of the main players, not just Trump himself, who pays lip service to our industry, and then also then does sign some EOs to like benefit us. But like now you have Scott Bessent, who is again one of the main characters of this like treasure, will they, won't they volatility, and he's intimately familiar with our world. Like he knows when he makes these decisions, he knows that it will impact the Bitcoin price and that it will impact the broader crypto landscape. So it's kind of crazy that we now have it seems like a very complete reversal from where we are 6 months ago. Now the key decision makers and players I almost don't dare to call them one of us, but they're kind of like come from our camp. And so it's surreal that, time flies. Where are we going to be in 6 months from now? Who knows?
Yeah, like you said, the incentives are aligning potentially between the policy makers and the hodlers, which is interesting. I'm going to sneak in one more thing here. I forgot. One of the main reasons for this whipsaw action was the announcement of the strategic reserve, right?
Oh, yeah.
There's going to be some summit on Friday,
Literally,
which is
when
tomorrow.
when this podcast comes out, they will be having the summit.
So we're going to find out a bunch more information. I know just before we started recording, the Texas bill passed in the summit for a state level reserve. So we're just trying to keep up here, Charlie.
Yeah. Even having this conversation, turning around the next day, and maybe let's say someone listens to it a day after, like 48 hours has passed and all of the news is cold and irrelevant. So maybe the mining pod has to do hourly roundups instead of weekly roundups. We'll see. I don't think we have the production resources or brain cells for that. That's it, boys and girls. Thanks so much for tuning into the Mining Pod. Shout out to those who make the Mining Pod possible. And we will see you all next week with the return of Will and eventually the return of Colin. So Matt and I can each go on our ski vacations. So thanks so much and see you all next week.